Right, QuickBooks, new series. Let's kick it off.
February 2026. The desktop version now costs $1,149 per year. 3 years earlier, it was $550. The company stopped selling it to new customers, is retiring the product, and doubled the price for those who remain. The users being pushed toward the cloud version did not ask for the move. The migration creates its own disasters. 1,100 invoices missing after one migration. Support closed the case and said they could not help further. 800 transactions gone after a forced upgrade. A desktop update broke installer, payroll tax tables, and company files across multiple clients at the same time. A thread titled it has destroyed our business. QuickBooks, 62% of the market. Built in 1992, so a business owner would not need to be an accountant to keep books. The default everyone uses, nobody loves, and the accountant network makes almost impossible to leave. Scott Cook had an insight in 1983. Managing personal finances was unnecessarily painful, and software could fix it. He watched his wife struggle with the family checkbook and partnered with Tom Proulx to build a solution. The company was called Intuit. The first product was personal finance software. In 1992, the expansion into small business accounting arrived. The thesis was that a small business owner should not need to understand double-entry bookkeeping to keep their books. The product made it accessible. For 30 years, it was the benchmark. The cloud transition accelerated in 2013. The strategic intent was to move users from desktop licenses to recurring cloud subscriptions. The transition has taken over a decade and generated more community resentment than any other product strategy in the accounting software market. In 2020, the parent company acquired a consumer tax and credit platform for approximately $4.7 billion. In 2021, an email marketing platform. Revenue across the parent company grew from $14.3 billion in the fiscal year 2023 to $18.8 billion in 2025. The company that started with a checkbook problem now generates nearly $19 billion annually. The desktop product that built the market share is being retired. The cloud product that replaces it costs more and produces migration failures the desktop version never did. The desktop sunset timeline is the mechanism driving the migration. New sales of the Professional and Premier desktop editions stopped after September 2024. Each version reaching end of support on a rolling schedule pushes users toward the cloud product. The desktop version released in 2023 loses support in May 2026. Users who remain on desktop face escalating annual costs on a product the company has declared end of life. The migration failures are documented across the research period. The 1,100 missing invoices in August 2024, the 800 lost transactions in February 2026, a 60-day migration window after which the company file may need to be abandoned. In October 2024, a payroll setup caused the software to file incorrect federal and state tax returns. In January 2025, an account was frozen and payroll taxes went unpaid. In June 2025, a desktop company file corrupted. The backup restoration through the cloud service failed. Support took 7 business days to respond. A server backup eventually allowed the user to rebuild. The September 2025 desktop update is the incident that affected the widest user base. The installer froze, payroll tax table updates failed, company files would not open. The thread described the issue as affecting multiple clients across a bookkeeping practice. The pattern is not a single migration going wrong. It is the cumulative effect of a forced transition where each step introduces risk the user did not choose to accept. The product in its cloud form provides capabilities that the market share reflects: bank reconciliation that connects to financial institutions and categorizes transactions, payroll deeply integrated into the accounting workflow, over 800 application integrations, industry reporting, inventory tracking on the higher tiers, and project-based accounting. The outsourced bookkeeping service provides human review on top of the software for businesses that need a bookkeeper without hiring one. The accountant network effect is the competitive advantage that feature comparisons do not capture. When the business owner's accountant, bookkeeper, and payroll provider are all standardized on the same software, switching means converting files, retraining staff, rebuilding workflows, and asking every external financial professional to adapt. The switching cost is not the software subscription, it is the professional relationship disruption. This is why the product holds 62% of the market despite the pricing complaints, the migration failures, and the support quality that the community describes as ranging from unhelpful to actively harmful. The support pattern deserves specific attention. A user locked out of the desktop edition in July 2025 described support as upselling the cloud product instead of resolving the access problem. A user whose payments and current account were disabled in August 2024 received no explanation. The pattern across the research period is that support functions as a sales channel for the cloud product rather than a resolution channel for the user's immediate problem. Someone whose accountant, bookkeeper, and payroll provider are standardized on the product and whose business requires the depth of reporting, payroll integration, and application ecosystem. The product provides should remain. The switching cost is not the subscription. It is the professional network that depends on the software choice. For complex businesses with accountant-managed books, the product's depth justifies the cost even as the price increases because the alternatives do not yet match the combination of payroll, reporting, and accountant familiarity at the same scale. Someone on the desktop version should plan the migration proactively rather than waiting for the sunset to force it. The documented migration failures occur when users migrate under pressure, often near a deadline, without verifying the result before decommissioning the desktop installation. Keep the desktop installation operational until the cloud data has been verified completely. Count every invoice, every transaction, every balance. The 60-day migration window means the verification must happen quickly. Budget the time before the deadline arrives. Someone evaluating the product for the first time in 2026 should compare the cloud product against the alternatives in this comparison before committing. The market share and the accountant familiarity are reasons to choose it. The price escalation, the support quality, and the migration record are reasons to evaluate whether one of the alternatives serves the business at lower cost with fewer documented failures. The product that was the obvious default for 30 years is still the default. Whether it is still the best choice depends on whether the business needs the depth the product provides, or whether a simpler, less expensive alternative covers the workflow at lower cost and lower risk. Someone whose business runs payroll through the product should understand the payroll failure cases documented in the research period. Incorrect tax returns filed by the software, accounts frozen with payroll taxes unpaid. These are not data entry errors, they are software failures that create tax compliance problems the business owner is liable for, regardless of which software caused them. Verify every payroll tax filing independently of the software's reporting. The software files the return. The business owner bears the legal responsibility if the filing is wrong. The product that Scott Cook built because his wife struggled with a checkbook has become an $18 billion company whose growth strategy is migrating users from a product they chose to a product they did not, at a price that increases annually, with support that the community describes as upselling rather than helping. The accounting capability is real. The payroll integration is deep. The application ecosystem is the broadest in the market. The accountant network effect is the moat. The price escalation, the migration failures, the support quality, and the forced transition from desktop to cloud are the cost of remaining inside the moat, the default everyone uses and nobody loves. Whether the alternatives in this comparison deserve the love the incumbent has lost is the question the rest of the comparison answers.